Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter Financial Toolbox. Today I was going to do an ETF review on VTV. That is the Vanguard Value ETF. Now first of all, why would somebody want to invest in a value ETF? Well, as you know, value stocks tend to be companies that are boring. Think Coca-Cola, think Johnson & Johnson. Companies that are well established, that pay a dividend, that have a large moat around their company. These are companies that are well established. These are companies that aren't going anywhere. So in times of trouble or times when the market seems to be panicky, these are companies that don't react as much. Now, true, these companies don't have the growth upside potential a lot of times that growth stocks do. And it's not reflective in their stock price, but these are companies that are solid and they're a little more stable than a lot of the growth companies. So let's take a look. First of all, VTV, as I said, this is a Vanguard Value ETF. Now this fund's been around since January of 2004. It's got a nice low expense ratio of just 0.04%. You guys, 4 basis points. It's $4 per 10,000. It's almost free. It's got about 85 billion in assets under management and a average trading volume of over 283 million per day. Some competing ETFs that would be equal to that: IVE, that's the iShares Value ETF. SCHV, that would be the Schwab Value ETF, Large Cap Value ETF. So you guys, this is a ETF that tracks large cap value stocks primarily. So if we take a look at what it says, VTF holdings reach beyond just large caps by our yardstick, including a portion of mid cap equities to determine value. VTV uses price to book, forward price to earnings, historic price to earnings, and a dividend to price and sales to price ratios. So basically they're looking at the company, look at companies that are solid, that aren't overvalued, and these are the ones that they're putting in their arsenal. So we can see that currently the price to earnings ratio is about 21.55. So that's nice, and low would be between 15 and 20, guys. But right now valuations are high everywhere. So price to book ratio 2.76, has a current distribution yield of 2.12%. So you are getting some dividends quarterly with this ETF. The number of holdings is 341. This tracks the CRSP US Large Value Index, which is under the MSCI USA Large Cap Value benchmark. If we take a look at the style box down here, we can see that it overweights to relatively inexpensive stocks or value stocks, right? It underweights to smaller companies and momentum stocks. It also underweights a little bit quality, and it overweights a little bit on yield or cash flow paid out. So you guys, this is an ETF where you're talking about value stocks, more dividend paying stocks. So you're not going to have quite as much upside as you will, and we're going to show that here in a minute. So let's take a look at how we've done so far this year. Looking at this year, actually, let's go year to date. So year to date, you can see we started here about 118 on December 31st of last year. And currently we're sitting at about 138. So we're up $20 per share. So significant, right? If we look the year to date, it's currently showing 18.59% for the year. Now, that's down a little bit less than the S&P 500 at about 20.5. But if we look at the 1 year, 33.5, 10 years, 10.7, 5 years, 12.94, and 10 years is 13.7%. So you guys, this has been a good ETF overall. Now, that being said, we all know the last decade has been a bull market. So does that mean it's going to happen going forward? Of course, we don't know that. So obviously all these are United States stocks. So let's take a look a little bit at the sector breakdown. So the top 10 sectors in VTV, the biggest sector, you guys, is financials at about 25.75%, followed by healthcare at just under 20%. Industrials make up a little over 12%. Consumer non-cyclicals about 11%. Technology only makes up 7.75%, you guys, compared to about 20.5% with the S&P 500. Consumer cyclicals are about 6.5%. Utilities are a little over 5.5%. Energy is about 5%, and basic materials and telecommunications each make up about 3%. So a little different breakdown than you would see in the S&P 500 ETF, right? But let's look at these top 10 holdings. These are names we know. Number 1, Berkshire Hathaway. Number 2, JP Morgan Chase. Number 3, Johnson & Johnson. Number 4, United Healthcare. Number 5, Procter & Gamble. Number 6, Bank of America. 7, Comcast. 8, Pfizer. 9, Exxon. 10, Abbott Laboratories. So you can see we've got companies that people know, and those top 10 do make up about 20.5% of the total on this ETF, you guys. So let's really quickly take a look at going back as long as this has been. I'm going to go into Portfolio Visualizer here. So the start year, because this started in January of 2004, that's as far as we can go back. But let's say we initially put in $10,000 in 2 funds. We're going to put first in VOO, which we know is the Vanguard S&P 500, and we're going to put 500 in VTV, which is the Vanguard Value Index. Let's take a look how they've performed over that time frame, you guys. All right, so we see 100% stocks either. Oh, look at that. Now, obviously, the S&P 500 has outperformed. It's at about 44,300, and the value ETF is only about 34,874. So it outperformed it by almost 10 grand. But let's take a look back in history, you guys. If we go back to 2017, you can see that there was only $150 separating these 2 funds in 2017. So this last episode of the tech market really taking off is showing in the momentum of the S&P 500. Remember, S&P 500 is based on the biggest companies, Apple, Microsoft being the top 2, right? Amazon being up there in the list as well. Google, all those. Now, these are not companies you're going to find in this ETF. So obviously with those doing so well, they're not showing here. But let's take a look at as I said, the final balance was 44,367 to 34,874. But let's look at the compound annual growth rate. The CAGR of the S&P 500 is almost 15%, 14.99. But the CAGR of the value index isn't terrible at 12.42, you guys. That's pretty good. The standard deviation is pretty close, although you can see the S&P 500 is a little bit smaller at 13.21. The best year actually goes to the value index at 33.1%. Also, the worst year goes there. So that's not to say the max drawdown, that means the most it dropped in 1 year. Actually, the value stocks went down more. So there you are. Let's take a look at the years, how they break down. And you can see for the most part, other than 2015, they act the same. In 2015, the S&P ended up just over 1.3%, and the value ETF was down just almost 1%. But 2018, they were both down, one 4.5, the other one 5.4. 2020, this is one where value stocks did not do. They weren't quite part of that big rebound that we had post the illness, right? So you can see where that really hurt them a lot. The S&P returned 18.2% 2.29%, and it returned 2.26. Is this an investment you should make? You guys, first of all, I never give you an advice on what to invest in, but I think these are solid companies. These you're not going to get as much growth, but I think it actually is a smoother ride. Now, the episodes that we saw on there didn't show that, but because of the intricacies of those particular declines and the way they rebounded basically tech heavy after the March 2020 dive, is reminiscent of that. Is this an investment to hold? I certainly think it could be a part. Would I make it my core holding? Maybe not. But I think if you were getting up there in the years and you wanted to take a little bit of the growth money off and put it aside and rechannel it to keep it a little bit safer, a little bit more secure companies, I think it's a good option. What do you guys think? Do you guys invest in VTV or any other value ETFs? If you do, let me know in the comments. Do you think this is a good choice, or do you think it's better off just to go with the S&P 500? Let me know that in the comments too, all right? All right, you guys, I hope you guys enjoyed this ETF review. If you did, do me a favor. Give me that thumbs up. It really helps the algorithm, gets my videos out to more people, and lets me know this is content that you guys like. If you're not already subscribed, you know the deal. Hit the red button, ring the bell. All right, we'll see you. Thanks.